Hello ladies and gentlemen, welcome to today's webinar. I'm Joseph Novic, Senior Trading Manager with GDM. First of all, ladies and gentlemen, I would like to thank everyone for being here this month, the month of scalping webinars. Now, in today's session, we will have a look at our last scalping trading system for this month. Of course, as I mentioned the last time on Wednesday, that the month of August we will have a slight break. Basically, the webinars will resume as normal from the month of September, from the beginning of September, of course, but you can, of course, start signing up from the second week of August for the new webinars, which are due to start in September. Also, to inform you about the trading recommendations that you usually receive, everything will be as normal up to somewhere around 12th to 13th of August, up to that week's Friday, which will of course also have a pause with that as well, as the department is going out on a little bit of vacation. So everything should be as normal from the month of September. So first 2 weeks of August you will be receiving trading recommendations as normal. The final 2 weeks we will have a break and resuming on September. And one more time, webinars month of August will also be absent, as I mentioned, and they will start again in September. Now, before we continue with today's topic, which is a very interesting strategy, a system that I adore pretty well, as well as it comes in terms into volatile markets, when it comes in terms into major news announcement, when the price is starting to pick up a trend. We are going to talk about counter trend scalping system. It's a very well performer. Basically it goes close to 90% of accuracy to this system. But the idea of releasing a webinar with this system came actually after the problems I started seeing in a lot of my traders. They've expressed some kind of dissatisfaction in terms of scalping systems which are not reliable. And this is basically the whole idea of the webinar, so I can give you something that you can work with. Something that you can clearly see that it's working. Also, let me mention that I'm also revising all of the systems that we've been talking about so far, so they could change in a matter of time. I'm testing it, changing it all the time. Every 6 months I'm coming up with new ideas, or let's say new revised, old but revised systems which are tuned up so they can work in the current market condition which we are going to see ahead of us. So everything that you can see that we're offering is pretty much tested for the past 6 months. Usually the valid time is over the next 12 months. However, they could also start failing up to 6th to 7th to 8th month of the year. However, this is the reason why I'm revising them, so we can, tweak here and there, so we can get our results as best as possible. Before we actually get into the system itself, I would like to show you one of the last systems that one of the traders here showed me that he's been using. It's very simple actually, there's nothing complicated in it. However, it fails to sustain profits in a matter of long term. This is a simple system. Here it is. One of our traders here just showed it to me when we were on a one-on-one session. This is a system with the stochastic oscillator, Okay, it's also a counter trend trading system. However, in terms of profits in the long run, it's failing to bring the person up on profit. It's either getting into a negative territory on his balance or somewhere in the middle of draw. This is the particular system that I'm talking about. Now, as you can see here, 585 are the parameters for this stochastic. The idea the person has been using behind the stochastic and the setup here is also a trend, counter trend trading system. But as he mentioned, when it comes into sustained profitability, the system doesn't really perform well enough. Now, it's very interesting. Why? Because the stochastic is actually an indicator that you can use in a sideways direction. Here it is. We have a perfect sideways conditions. In this case, we can see the bounce off from the levels of the stochastic. But when it comes into a trend, the stochastic remains within the boundaries of oversold conditions here in that downtrend. When it comes into counter trend trading, the signals that the person is receiving are actually coming a little bit too late. As you can see, the crossover here of the signal line and the main line of the stochastic are coming right after this huge bullish candle. And the sustainability of that particular trend doesn't give him a good exit. The exit comes right over here on the overbought conditions, but he's actually on a loss with about 5 pips. Okay, now this is the exit. So this is actually signaling a new, or should I say, a continuation to that trend. So basically, the way that he's using this counter trend system is vice versa to the way that he should be using it. Basically, the stochastic is not intended to be traded that way, especially on smaller time frames. Now, coming in terms of a larger time frame, with that setup, when I mentioned to him on our session, was that once we see some kind of a trend picking pace, we can see from overbought conditions that stochastic is declining, and his exit could come down here on that crossover. So basically, the whole movement from here to here, it could have taken in a matter of 114 pips, which is pretty much $1,140. Okay, I see a few questions here. One of it is related to the stochastic. I suppose that the screen, dear trader, that you're using is a little bit smaller. Mine is 21 inch, so basically the chart could be a little bit smaller with you there. The parameters of the stochastic are 585, but let me tell you one more time that the system that I'm actually showing is just an example from one of the traders that has been using it to counter trend trade the particular momentum of the market. But my suggestion was, of course, if he's using the stochastic, to use it within the trend direction for entries and exits, because pretty much that's what the stochastic is intended to be used for, because it's showing you market volatility plus market direction. However, the system that we're actually going to talk about today is far more interesting. Of course, it comes with a few rules as usual. One of it is that the system can only be used in downward trend. So when the trend is down, you can trade when the market starts retracing. But that's the good part. You see, the accuracy is up to 90%. So the flaws are that it's, if you are going to use it to profit from it, you have to use it on a downtrend. However, if so when you use it, 9 out of 10 trades would be profitable, as we can see. Now let's have a look at the system that actually mean. I'm going to get rid of that stochastic because we don't need it. We're not going to talk about it anymore. You saw just a small example here of what I meant of why the system is failing with that person. Unfortunately, the market is in a sideways direction on the 5-minute chart on the euro dollar. Why I'm showing this is because of the recent market, market economics that we were getting, the fundamentals out of the ECB yesterday, also in connection with the Brexit, so on and so forth. However, the British pound, right now it is in a very, very tight channel, so we're not even going to talk about it because 2 weeks ago we saw that market slump on the British pound. And the preferences of most of the traders are that they're actually trading the euro dollar, and on the other hand, because the spread is extremely tight, it's down to 1 pip. Right now you can see it's 7/10 of a pip. So basically if you are in the right direction, you are ultimately going in a profit right away. Of course, there are other currency pairs which we offer with extremely tight spread. Commodities as well. Gold is down to 2-3 pips on a spread average. So that's pretty much why we are choosing the euro dollar to, as an examples on scalping strategies, because we don't have to pay attention that much to that spread that we're talking about. But if we have to go to scalping some exotics, let's say the Singaporean dollar, the Malaysian ringgit, or Turkish lira, whatever it is, you will see that the spread is significantly higher. So you're not only going to have to beat that spread in order to realize profits, but it's actually economically unsustainable to trade, scalp trading the currency pairs which are with such a huge spread. Besides, they're mostly muted in matters of the absence of any kind of economic conditions like major announcements, interest rate decisions, so on and so forth. Now, down to our particular system. The first indicator is the relative strength index. Of course, we're starting with this one because that will be the base on what we will be working on. Now, the period, however, here is one of those that we have never used before, or I've been recommending it for some different reasons, but today it's a period of 10. The levels here, I can see that they're presetted, so I'm not going to be touching them. Levels of 20, 30, 70 and 80, and the middle level of 50. Now this is how it looks, nothing different from what we've seen so far. Now, the other indicator, however, of course I will leave the best part for last. We will be using the so-called, where is it? Moving average convergence divergence. The settings here are, let's say, doesn't really matter here on the MACD. We can use the default settings of 12, 26, and 9. Basically, we don't really care about these settings that much, rather than we're going to use that stochastic only to show us market trend, trend strength, also when the volume starts decreasing on direction. This is basically what we need to see. We don't want to trade that scalping system on a sideways direction. So that's pretty much what we need to know. But the good part is that the other indicator will give us such a convergence that in a matter of expansion or the divergence of the two indicators, which one of it I'm going to plot over the relative strength index, will give us a very good idea of what the trend is up to. Now, Before we start scrolling back to find a good trend for our examples, you know, we're going to forget about this sideways range for now. The so-called average directional movement index is the one we're going to use. However, I'm going to take it from here. Let me find it. It's on trend, average directional movement index. I'm dragging it directly on the top of the relative strength. However, now you will see here that the things we don't need are the levels of the ADX. So basically we remove all the levels and we're going to use the levels of the relative strength only. Colors here for the convergence, I'm going to remove it later because I have to take from the background, but right now I'm just going to use the period of 14 for that ADX. Color I'm going to choose white because I need to see it clearly. I need to know which one is the ADX, which one is the relative strength index. So one thing I forgot to do is just copy my background so I can remove those directional indexes, because the only thing that we're actually going to use is the ADX line itself, and this is pretty much what we get at the end. This is how the system looks like. You can of course just go to a template, save it as, let's say, counter trend. Sorry, I'm just going to go for CD as a counter trend trading, and I'm going to save it for future references if I want to just plot it on top of any other currency pair or chart. So let's have a look at a good trend as we've been talking about. Before we actually find it, the good thing about this system is that eliminates the situation that we spoke about earlier when that person told me about his strategy, you know, that he's using, when the stochastic gave him a signal to the upside, which is a counter trend from that trend here, as we can see, which he actually trades this particular case. But as you can see, the direction is good. However, the when it comes in terms into exit, it comes way over here, which is somehow in 5 to 6 pips of negative territory, which in our case is eliminated by our system. In fact, it actually shows us direction to the downside. But based on the fact that the ADX is only used when it's rising, you know, because it's a volatility measurement, it has to go up for us to know what is going on. And the right way to use it is when it's in extreme conditions. Now, this is the case where we use our ADX and RSI. This is all our case here, as you can see. Now, we need levels of the RSI, which you can see here on that corner. We need those levels to see where exactly the two indicators are. Now, preferably, we would use levels 20 and 80 for our triggers. And how does that happen? Okay, first of all, we have that rising ADX. This is a delayed indicator of that particular downward movement. We see that the RSI is going down because the volatility slightly starts dropping, and of course the price gets into oversold conditions. While of course it gets to the extreme levels, plus when the ADX goes above or somewhere at the extreme conditions. That's why we need those two levels, because sometimes on a smaller volatility we don't need those extreme conditions. Mostly it happens on announcements, let's say large volume of money going into the market, but that's why we need those reference points here. So when we start seeing that decline slightly, we know that the move to the downside is over, the volatility starts dropping, and the price starts retracing. From that point on, we can start buying or counter trend trading, because the recent trend was to the downside, and now we're actually buying from the bottom of that trend, as you can see here. Now, for exits and stop losses, I will talk about in a few minutes, but for take profits, now we're scalpers, right? We need quick profits, like money in, money out. So 10 pips of profit are absolutely enough. Why is that? Very simply, if you are a scalper, you need substantial amount of money. Let's say, okay, substantial is a very huge word to say, but let's say if you are going to scalp the market, you're definitely not going in with $100 balance. Of course, you can do it. You can go in for profits of $1 or $2, you know, until your balance grows up to 1,000, 10,000, 20,000, so on and so forth. But let's give an example. You have $10,000 account. Quite appropriate to trade one lot. Every time you trade in these conditions, and that's only one currency pair, we're talking about 5-minute charts, here you cash in $100. Here on this condition, same, you can see that that shooting star, another $100 of profit. So this is in a matter of an hour or two, you've already made $100 profit, and only by trading the correction of the market. Of course, you can use a separate system. You know, you can open another chart with the same currency pair, different time frames, different strategies. We've been talking about so much about trend following. You can follow that trend, but when it's over and when you consider closing your position, you can catch that move. Or if you're too greedy, you can go up for even $280 in about 17 sessions, which I don't need to calculate how much 17 sessions are, but this is about 1 hour and 40 minutes. So as you can see, for this reason, that system is so profitable, so accurate. Of course, there is no 100%. But one more time, the rules are only downward trend with long positions, with buying, okay? In terms of stop loss, the appropriate conditions here of this system is basically because it gets, you know, you can receive signals very, very often in terms of one currency pair, or in terms of 5-minute chart time frame. You can afford to go for 2-to-1 risk-reward ratio. Basically, if you're going to profit here the $100, you have to be ready to lose about 200, and it's not even in the chart. Here are the same conditions: $100 in, okay, with 200 out. Which in this case, if you are too greedy, you know, to cash in, let that profit run, which I wouldn't recommend because it's counter trend trading, and I'll show you why it's not recommended. You would hit stop loss way on this level, and that's on the shadow here. So you see, and that would be hit based on the tight spreads that you're getting on the euro-dollar pair. Now, moving backwards, let's clear that chart a little bit. Okay, where were we? Okay, we were here. Now, let's move slightly backwards, see what we've got. Same conditions here, ladies and gentlemen. As you can see, you know, signals like these, you're not only going to receive into the downward trend. Sometimes it's into downward and steady sideways direction where you can get that as well. And you can see when the extremes are correct on the ADX and the RSI, you know, from this point on, you see, there you go, almost $100 in. However, when I said up to 90%, you can always fit in this 10% you know, condition where you will get up to just a few pips, not enough to hit your profit, and down to you know, your stop loss way over there where we show earlier. Same conditions here on that downtrend, but when I mentioned fixed stop loss, fixed take profit on this system, basically for these conditions, because we are counter trend trading. And you can see downward trend, stops here. We see the extremums, okay? From here we buy, there you go, 12 pips, or you cash in on the 10th pip, which is $100 on the lot. And why we should not let it further? Because you can see down here is your stop loss. So 2-to-1 risk-reward ratio is the most perfect conditions for the system. And to be honest, with a downtrend, it performs extremely well, even for my surprising, and it's like that for the past 3 years. I have not changed the system so far. As you can see here, we're getting the same conditions. A little bit questionable, however. Riskier traders might play that as well when the ADX is extreme here, and you have almost down to that 30 level, but it's not even near it. You know, it's very, very close to it. Just a few ticks. You might take that, but why am I leaving the 200 exponential? Because it doesn't matter the time frame. It's very important support and resistance level. So you always have to pay attention to it. In that condition, you can always go with it, but it's not recommended. Even though the profits here are up to $200 on a lot, you still are going to cash in on that 100, of course. But what we see is the MACD, as we know it, it's flat. It shows no trend, but here it shows a development of a very huge slope. You know, the bars are expanding every time, so we can see the trend is firmly to the downside. We're not only following that trend with a different strategy, but we can scalp it, you know, for that profit, that particular profit here, to take it out as an addition to our downward direction. And this is basically because the MetaTrader 4 allows it. No problem, multiple conditions on your positions with that particular platform. It's very flexible, as we already know it. So that's why we need the MACD to firmly suggest a direction, as well as to an increasing money movement, increasing volume on the market. This is what it measures the volume of the market. Also, one thing extremely important here is the moving average of the MACD. This is also for the so-called riskier players. Okay. Now, within the bars, the moving average is always suggesting that further direction to the downside is expected. Therefore, it's not recommended to leave your position hanging as we're counter-trend trading for longer than that recommended profit. Why I'm saying that the 2-to-1 risk reward, or the so-called 20 pips stop loss, 10 pips of profit, you can always go for 5 pips profit and 10 pips stop loss, or 20 pips of profit and 40 pips of stop loss. But I'm saying 10 TP and 20 stop loss is simply because of the retracement that is normal to occur in a trend, which is about 23%. As you can see, it's over here from that trend, and this is like a normal trend following. You would actually expand your positions by adding to your positions towards that exit here. Now, this is of course a different case which we've been talking about for a very long time, but let's have a look at another case here, why it only works in downward trends. Well, basically because we don't have that particular divergence. After the convergence, we have a divergence extremely in the conditions of overbought and oversold by the two indicators, suggesting, as you can see, even in that case here, it can actually give you profit by telling you, I am oversold here and I am overbought here, so I have to buy. But using it in an uptrend is because both of the indicators will be up here, okay? And they will start rising very slowly. it's not going to be a rapid expansion of exhaustion of money flow, exhaustion of volume. So you're not actually going to get a signal that appropriate to trade the upside or the correction of the upside trend, simply because when it starts declining, they're both declining. So you see, the point is to always use it in a downward trend. Now let's find another case like this one. There you go, downward trend. The bars of the MACD is showing pretty good, pretty good hill over here, or whatever you want to call it. The expansion to the extremes from here up here. There you go, 10 pips of profit. Even in that gap, you might even get to a bit of a higher profit. Let's see the other conditions here. There you go. I'm sliding it this way further so we can see these extremes here. There you go. It's a strong downward trend suggested by the MACD as well. We have the extremes here, and there you go. Boom, another $100. Same condition here, even though the trend is very slow, another $100. So you see, the system is one of my best performers, but it only comes in terms into a downward trend. There you go. It comes over here, your profits slightly over there from that downward trend. However, now this is a technical system, all right? Also, you're a human being, you have a brain, and you are fully aware that when a trend retraces 100%, usually ends up in a sideways direction. So you might even take that condition here as a pass. Basically, you might just leave it be, or you can always take it. Of course, the system usually fails only within the 10%, and you're safe within that $200 stop loss here. Another case, let's see. This is also one of the cases from which we're getting a very small correction. However, even in that case, our stop loss is safe down here, and our profit comes way over here. So you see, this is a choice. This is those are these 10% where we're talking about. You're going to get that signal, definitely. You are going to go into a profit, but how long is it going to take for that particular 10 pips to hit? It might take a while. So until that time, the market might even reverse and hit your stop loss. But for the past 5 or 6 conditions, we saw what, one failed event. Actually, we didn't even see one stop loss hit so far. So so far 6 conditions, not even one hit. Downward small trend here, extreme conditions here. As you can see, your take profit comes on this bar here, and your stop loss is way safe. This is what, number 7, I suppose. A good downward trend, the extremums over here. Let's say you buy somewhere over here on this one, your take profit goes on this candlestick. Your stop loss is way down here, even below this one. As you can see, no, it's actually at it. But you see, it's far away. That makes it about, what, 9, I suppose, as an example. So far, we have a lot of sideways direction. You can see how mixed these conditions are. We don't have a good expansion. Nothing is signaling is a good extremums. Only in a matter of this one here, you have that signal. Okay. Now here we have a very, very tiny downward direction, but as you can see, that's why we need that MACD to suggest a very, very good expansion of the bars. So basically, if one of these rules fail, you don't use it. But if you want to disagree with the MACD and say, okay, it's going to start expanding, well, you might want to buy here, but there you go. You know, your stop loss is going to be hit. So ignoring one of the rules will get you to hit your stop loss. Also, this is a good condition here, downward direction, downward trend. The indicators are in extremums. Your MACD is way built. So here you're getting your particular target within the next session. Of course, the moves keeps going up. However, this is only a scalping trader. So what you need is downward trend, big histogram on the MACD, the expansion of the extremums, then you buy, hit your stop loss, move away. Even if in the matter of this condition here, okay, you see, well protected from the 2-to-1 risk-reward ratio. Even if I keep going with this, I will still end up into one and the same condition. So far we didn't fail even once. You see, there you go, 10 pips. Come over here, even in the second one. Big histogram, extremums on the two indicators. That's all we need. So basically, in the whole 11 or 12 conditions that we saw, we didn't fail even one. Once we failed if we ignore the MACD. So that's your 10%. Well, that's all about it, ladies and gentlemen. I'm not going to go anywhere further with it. We can still keep scrolling backwards and backwards, use other currency pairs. The results will be all the same. I've been trading with it for the past 3 years and it didn't fail me. That's up to you, of course. It's just a recommendation if you want to use it. And now, this is the end of the webinar today. Thank you very much for joining us. Now, for any questions you might have, go to our website, GDMFX.com. The pop-up chat on the down right corner will occur in a few seconds. You can ask your questions freely over there or request for a one-on-one session with me or any of my colleagues. Or, of course, you can directly call us on our telephone lines if you have an emergency. Or you can also go to our Facebook page, rate us, like us, do whatever you want. That's all about it. Thank you for joining us. I'll see you in September, not next month. So basically, whatever that is going to happen during that month of August, I will still be available to touch base on phone. Just call us at the office and they will patch us through. Whatever that else comes out, you can always drop us an email at webinars@gdmfx.com, and that's where your answer will going to come from. Thank you for joining us. I'll see you in September. For now, happy trading, good luck, and I wish you a lot of profits. Bye-bye.